Welcome back to this explainer. Today, we are taking Teradyne's massive Q2 2026 earnings report and translating it into what is honestly a thrilling business narrative about the AI and semiconductor boom. We hear a lot of buzzwords flying around lately: artificial intelligence, chips supercycles, all of that. But looking at the earnings of a company like Teradyne gives us the actual hard ground truth. These guys manufacture the automated test equipment for the chips. They are essentially the silent architects, making sure that the hardware powering our modern world actually functions.
So, here is our roadmap for today. We're going to kick things off with a record-breaking quarter, figure out exactly what drove the surge, dig inside the financials, and finally, look ahead to 2027.
All right, let's jump right into part one, a record-breaking quarter.
We really have to start with the fireworks here, because Teradyne just delivered its second consecutive quarter of record revenue, completely blowing past their own high-end guidance. And when a company shatters its own internal ceilings like that, it tells us demand is accelerating wildly. Revenue was up an astonishing 104% year-over-year from Q2 2025. Just pause and think about that number for a second. For a nimble, early-stage software startup, doubling your revenue in a single year is a massive achievement. But for a giant, established manufacturer of physical, incredibly complex testing equipment, a 104% jump is literally a seismic event. It is the sound of an entire global industry kicking into overdrive.
And get this, if you think that revenue jump is wild, their earnings skyrocketed by over 300% in that exact same time frame. This right here is where the absolute magic of scaling a business shows its face. They didn't just sell twice as much equipment, they became radically more efficient at turning those new sales into pure, bottom-line profit.
Going from $652 million in Q2 2025 to a staggering $1.32 billion this past quarter really hammers home the sheer scale of the capital flowing into the semiconductor space right now. We aren't talking about incremental growth anymore. This is a completely new baseline for the company's earning power.
Which brings us nicely to Section 2. What actually drove this surge?
Well, slicing up that $1.32 billion pie instantly tells us that right now, Teradyne is overwhelmingly a semiconductor story. Now, they do have some really fascinating divisions in product test and advanced robotics, and those are bringing in about $100 million each, but they are completely eclipsed by the massive $1.12 billion generated purely by semiconductor test. Make no mistake, this company is riding the crest of the global chip manufacturing wave.
So why does a massive jump in DRAM and NAND final test actually matter to us? Well, it tells us that the memory chips required to power AI are in absolute hyper-demand. AI data centers require unimaginable amounts of memory, and every single one of those incredibly complex memory chips needs to be rigorously tested before it ever goes into a server. Teradyne is sitting right there at that critical bottleneck. They're basically providing the picks and shovels for the modern AI gold rush.
CEO Greg Smith perfectly summarized their strategic positioning, and it really shifts our story from just abstract dollars on a page to real-world infrastructure. He emphasized that Teradyne isn't just catching things at the end of the line. They are capturing value from the very beginning of the supply chain, the raw silicon wafer, all the way through to the completed AI data center. That whole end-to-end strategy, it is paying off handsomely.
Okay, let's open up the hood for Section 3 and look inside the financials. Now, you'll see non-GAAP sprinkled constantly throughout this earnings report. Just as a quick refresher, this simply strips out the messy, one-time noise, things like restructuring or amortizations, to give us the clean operational truth of their baseline performance.
And when we compare those numbers side by side, we see just how close the adjusted numbers are to the raw data, which proves the underlying profitability this quarter is incredibly robust. GAAP earnings per share sits at $2.38, and the non-GAAP adjusted number is $2.47. The fact that these are so close means this was a remarkably clean quarter. Teradyne didn't have to rely on accounting loopholes or massive one-time adjustments to post great earnings. They simply ran an incredibly profitable, highly functional business over the last 3 months.
And the crucial takeaway here is this GAAP gross profit number for the quarter, nearly $795 million. It demonstrates incredibly strong margins as they scale up. Remember, their total revenue is about $1.32 billion. To pull almost $800 million in gross profit out of that shows us their manufacturing and delivery processes are highly optimized. They are keeping a vast majority of the value they're creating.
Finally, let's move to part 4 and look ahead to 2027. Because the market is always a forward-looking machine.
Looking at the immediate Q3 guidance, we're seeing projections of up to $1.3 billion. But that leads straight into a really interesting tease from the CEO about major wafer fab investments coming in 2027. Basically, as these massive new global fabs come online, Teradyne is projecting that the demand for their testing equipment is going to experience another powerful, sustained surge.
Now, of course, to be totally impartial, we have to highlight the safe harbor risks. We're talking about macroeconomic factors, supply shortages, and complex US-China export controls on semiconductor equipment. The tech industry operates on a truly global scale, which makes it highly sensitive to geopolitical friction. Supply chains can bottleneck out of nowhere, and shifting trade regulations around who can buy what kind of advanced tech can impact even the strongest corporate momentum. So these are absolutely the headwinds we need to keep an eye on.
Teradyne undeniably knocked it out of the park this quarter. But considering those massive fab investments projected for 2027, the biggest question I want to leave you with is this. Is this AI-driven hardware supercycle only just getting started? We are literally watching the physical foundation of the next generation of computing being built in real time. If global demand for AI processing continues at this breakneck pace, the businesses testing and verifying this technology are poised for an era of historic growth. The infrastructure of tomorrow is being built today, and Teradyne is testing every single piece of it. Thanks so much for joining me for this explainer, and I'll see you next time.